Good morning, good afternoon, good evening, wherever you're watching me today. My name is Peter. Welcome back to Invest with Peter. So today I'm going to be talking about what you need to do next. Where we saw the market went down on Friday just because of the news got from the Fitch downgrade of the United States economy, and also because Apple didn't really give the market what market was actually expecting. Well, I'm going to be telling you now what you need to do instead, and that is what I'm going to be doing as well. And if you see me for the first time, my name is Peter. Please subscribe to the channel, like, and put your comment down below. I always release my video once in 2 weeks or once in a week, but every time I bring my video is always on point. Please subscribe and help the channel to grow. Thank you very much. So today, now, the Fitch. All right, so some people are wondering, what do you mean by Fitch? Well, Fitch is just like an organization that looks into different Western economy and just upgrade or downgrade or remain, put the economy on like, okay, let's say overweight, underweight, outperform. That's how they rate countries' economy. So looking at United States economy, right? They came up last week and said, well, United States economy has been involved in so many things, and it's high time we drop United States economy from AAA to AA plus. That's more or less like downgrading. All right, not to outperform, not overweight, downgrading the economy. And US senators and politicians, economists are not really happy about this, but it is what it is. And they actually highlight three things that I'm going to be talking about today that happened that made them to downgrade US economy. The first thing is they said US spends too much money for the war and so many things in the economy going on that US is spending and printing too much money. That's the first thing they analyze and say, if United States get hold and get a grip on that, they're going to be, increasing or maybe upgrade them at some point later on in the future. But at the moment now, they have no choice than to downgrade US economy because US is spending too much money. And we can all see that United States, most especially is sending loads of, weapons, monetary gifts and everything to Ukraine to support Ukraine's war and all that. So that is having a dent on the economy. Also, they said United States is cutting too much taxes. And guess what? Democrat actually jumped on this and said, well, it's Trump's fault. He was the one that brought the policies that made, tax to be like, something that you can just grade people like the more you earn, the more you pay, or the more you earn, the less you pay. So Democrat jumped on that and they said, well, it's not our fault. It's definitely Trump's policy. That is what Democrats are talking about. They always find an excuse to question the former government, right? They said that's not their fault. That's the previous government's issue that's led to this situation. So Fitch says because of these two things, right? You are spending too much money on war and random stuff. They're printing too much money. Secondly, they are cutting tax too much, and it's not going to sustain the economy. And the last one is owning too much debt. United States at this point owes over 30 trillion US dollar, the biggest in the whole world. And looking at that, they were like, well, we can't even understand why your economy is not even in recession at this point. But however, you guys are actually owing $30 trillion. That's uncalled for, right? So this is a major reason why United States economy was downgraded last week. And also looking at this now, market was like, well, that's not really good enough. So markets started selling off. People was taking profit left and right. And Henry report also coming around and people like, well, we started to take profits and all that. So what you need to do, right? What you need to do is first thing is look at your portfolio now as an investor. I'm talking to you as an investor now. Look at your portfolio and take the opportunity, right, to rearrange your positions. Whether you have some companies that just turned green now and you don't even have more prospect on that company, it's about time you sell out of that company and pitch your tent and buy into solid and valuable companies that you want to keep for a long time. So that's number one. Number two is don't ignore the red days. The red days is good for dollar cost averaging DCA into big companies that pay dividends, or probably company that hold like trillions of dollars in asset, companies like Apple, Microsoft, Amazon, Google, and all that. Dollar cost average into this, because most people are telling you now, well, we're going down now, market is gonna go through a 10% correction? How do they know? Tell me, do they have like something they're looking at that's telling them the market is gonna go down 10%, 20%? Everybody's just guessing the market now. If you listen to your YouTuber telling you, oh, market is gonna sell off now, markets are gonna go down, where they're not telling you the truth, right? Nobody knows, nobody has the crystal ball to see what's coming. But what you can do to help yourself to go against the direction they want you to go is dollar cost average into good companies and hold your ground. So the next one is institution missed the opportunity. We all know these institutions last year, late last year, early this year, they were selling this recession news for us, that all this news coming from, Bloomberg, Yahoo Finance. They keep coming and shouting and talking on top of their voice that US economy is going to a recession, and they just keep pushing the fear out there. They missed the boat, right? So when they missed the boat, they were like, market started going against them. People that were shorting are now at loss at the moment because market was actually going up instead of going down. Nobody's talking about recession. Inflation is actually going down, unexpectedly, and people were thinking, okay, where's the recession you promised? So they missed the boat, right? So they're now taking this opportunity to sell their position, to cover their call. Like, okay, we know that we missed the boat, and this is where they want to actually come in. And guess what? They will not buy at the top. Institutions always buy at the bottom. So they want you guys to sell your position so that they will buy low while you're selling. While you're selling, they will buy low while you guys are selling low, right? So sell low, they will buy low. And that's how it works. So they want to bring the market down to get into this market because they realize, well, the inflation that we think is going to bring recession is no longer there anymore. Inflation now is 3%. So that means the possibility of this recession is probably, 0.5%. So it's not even real anymore. So now, when are they going to start buying? This is where they're going to start buying. And guess what? By next week, we're going to see volatility as well. So they still believe they want to get in before the trend start leaving the station because they want to go on that bull market as well. So what you need to do is don't go against the market at this point. Buy solid companies and take profit at the appropriate time. So because, like I said, inflation is dropped down to 3%. So tell me, where is that recession they're talking about? All those guys in suits, they missed the boat. They want to get it and they want you to sell your stock. Also, the Henry report, companies are reporting their earnings. Apple the other day, they were not making much money from their wearables and from mobile phones and all that. So people were weary, like, okay, what's going on? We expect, Apple to respond and to report a good earnings, but now they're lagging behind. So what's going on? And because Apple has 8% stake in S&P 500, so it's a big company in S&P. So if Apple goes down, expect the whole market to go down. So Apple lost like 4% on Friday, and that's how the whole market went down. So if you're looking up at Apple, it's a big company, over $3 trillion in asset, and it's not a joke. It's not a little company, it's a big company. So that's why market is actually cool enough at this point. But I expect the market to go like sideways for a while, but I believe we're still gonna be going on that bull ride. Maybe we're not in the bull market yet, but at this point we're riding towards that bull market that we're always looking at. So now what I'm actually telling you now is, do not panic at this point. Like I said, dollar cost average, look at what institutions are doing, rearrange your portfolio. Inflation is down. Tell me why market will be down. And also, geopolitical issue is still there, but it's not an issue at this point going forward. So looking forward, I think, is just an opportunity to start buying. So follow the market, follow news, and follow the big money. Well, thank you very much. I'll see you on the next one. My name is Peter. Please subscribe to the channel. Thanks and bye.